The coronavirus has caused the world's economies to teeter on the edge of recession. Stock markets have pulled back at their fastest rate since 2008. So how do we as investors play this development? Let's look at what history can teach us. On September the 3rd, 1929, the final year of the roaring 1920s, the Dow Jones Industrial Average peaked at 381.27 after a 27% increase over the last year. The Dow Jones is simply the name given to the market index that tracks the US's biggest 30 companies. On July the 8th, 1932, this average was at 41.22. The Great Depression had caused the market to lose a mind-blowing 89% of its value. It took another 22 years to recover to its high before the crash. This was a crippling blow to many investors at the time. But why was the most famous stock market crash in history actually a hidden opportunity for some, and what can we learn from it today? Warren Buffett, the fourth richest man on the planet, says, "We must be fearful when others are greedy, and greedy when others are fearful." Any crash in a stock market presents an excellent opportunity to purchase shares at bargain prices. Now, this sounds so obvious, but throughout history we consistently see money poured into the stock market when times are good, before actually being withdrawn after a sharp decline. In the year prior to the dot-com crash of 2000, nearly $500 billion was poured into the stock market. During the subsequent crash, where the market lost around 70% of its value, only around $36 billion was put into the market at its lowest point in 2002. In other words, people were willing to throw all their money into the market when prices were high, but completely lost face and refused to do so when shares were trading at rock-bottom prices. And even worse, many investors tend to panic and sell off after these crashes. History has consistently taught us that this is the worst possible strategy, as the market has always recovered. So how does the market perform following a crash, or bear market as they are known, which simply means a market that loses a great deal of value in a short space of time? A bull market, meanwhile, is when the market charges upwards to great heights. Quite simply, bulls follow bears. Every bear market in history has been followed by a larger and longer bull market. The average bear? Minus 38%. The average bull? Plus 339%. I like these numbers, and I have the temperament to not touch my portfolio during the bad times, and instead take the opportunity to buy up cheap shares in the knowledge that the good times will soon be back. By holding firm when our portfolio decreases, and using this opportunity to hoover up some shares at low cost, we can see phenomenal returns. We must be greedy when others are fearful. Sir John Templeton, who Time magazine named arguably the greatest stock picker of the 20th century, ordered his stockbroker to buy 100 shares in every firm on the New York Stock Index that was trading for less than $1 after the Great Depression. His portfolio quadrupled in the next 4 years. Now, the stock market has changed over the last century, and the coronavirus is a new situation to investors, meaning this is not a recommendation for a strategy today. Likewise, none of this is financial advice. I'm simply making these for educational purposes, but can hopefully inspire one or two of you to pick up an investing book for the first time. If you'd like some recommendations on the books I found helpful, please comment down below and I'd be delighted to give you them. What we can learn though from Sir John and Warren Buffett is that bear markets bring opportunity. Overall, we know crashes are coming, but we also know that good times have always followed. Ride them out, look for opportunities to grow your portfolio when prices are low, and always remember, be fearful when others are greedy, and greedy when others are fearful. If you enjoyed the video, I'd really appreciate a like and sub, as it's so helpful for a new YouTube channel. Thank you so much to those who have allowed me to hit my first 100 subs already after just 2 videos, which I'll link after this one. Your support means the world and I won't forget it. As always, happy investing.